There's nothing more you can really say, as Einhorn says the market is telling them they were wrong about nearly everything. That's according to the letter. There's no sugarcoating these returns here, Scott. Down more than 18% year to date, as you said.
And he doesn't either, by the way.
No.
This is a very conciliatory note that he put out to his investors.
Oh, very conciliatory. And he mentions he understands why one would redeem, but he believes that his portfolio is really set up for the long term. He actually spoke on an investor and analyst call this morning for Greenlight Re, where he blamed what he called a frustrating environment for value investing and said the reversion to the mean should happen sooner rather than later. They just don't know when.
Our year-to-date investment result is poor, but we're encouraged by the underlying fundamentals of the companies in our portfolio, which have generally improved in our long book and have deteriorated in our short book. It is difficult to explain the disconnect between the stock prices and the fundamentals. Our expectation is it will close over time to our benefit.
Einhorn says they've been trying to mitigate losses by increasing their use of put options in the short book and managing their position sizes. Their short side is really the culprit for much of the firm's losses. Einhorn said they've covered most of their Netflix equity short between January and April, but he actually added to his short in Athena Health after the shares popped on news the company was exploring a sale. And despite all of these forces, Einhorn did concede that it could have been worse. He says trades in the quarter saved the firm about 5% of capital.